Right now, something extraordinary is happening in the financial markets. Silver has officially broken through $50 per ounce for the first time in modern history, and the entire precious metals community is electrified. From Peter Schiff to Mike Maloney, Chris Marcus, and dozens of seasoned analysts, everyone is sounding the alarm. Let's go step by step and unpack what this all means, because this move isn't random. It's not a meme-fueled spike or a social media trend. This is the result of decades of suppressed value, distorted markets, and a global shift back toward hard assets, real, tangible value, as faith in fiat currencies continues to erode. What's happening? The price explosion. Peter Schiff's latest post says it all. Silver is now up over $2, trading above $51. That's a massive single-day move for a metal that typically moves in cents, not dollars. But more importantly, this surge isn't being driven by speculative futures. It's coming from the spot market, where physical silver is bought and sold for immediate delivery. That means real investors, refiners, and industrial buyers are scrambling for the metal, not paper contracts. This is what analysts call a structural breakout, where a market breaks free from decades of suppression and reprices to reflect real demand. Gold to silver ratio, a red flag for fiat. Next, Rashad Hajiev pointed out something that most people overlook. Gold to silver ratio collapsing down nearly 4% in a day. That ratio is a critical signal. It measures how many ounces of silver it takes to buy 1 ounce of gold. Historically, the average sits around 60 to 70, but when the ratio suddenly collapses, like it just did, it means silver is outperforming gold dramatically. And that usually happens when physical silver scarcity begins, or when confidence in paper currency is slipping fast. Investors aren't just hedging anymore. They're moving into metals aggressively. It's like a quiet vote against the dollar, against endless money printing, and against the idea that digital paper assets can replace real, tangible value. Spot versus futures, the meaning of backwardation. Chris Marcus made a powerful observation. You are now living in a $50 silver world. The spot price has shot past the futures price by over $1. This is where things get very serious. When the spot price is higher than the futures price, it's called backwardation, and Bob Coleman confirmed it in his own post. The spot cash market is now $1 higher than the December futures contract. This means people are paying more for silver today than for silver in the future. Why would anyone do that? Because they don't trust the future delivery system. They want the real thing right now. That's what backwardation represents, a breakdown of confidence in paper markets and a tight squeeze on physical supply. Historically, backwardation in silver is rare, and when it does occur, it often marks the beginning of major structural change in the precious metals market. Real demand, not hype. One of the most emotional posts came from Silver Ape King. $50 silver, all-time high. Real money just broke free. While it may sound like excitement, there's deep truth behind those words. For decades, silver advocates have argued that paper silver, futures contracts, ETFs, and unallocated accounts have diluted real value. The actual amount of physical silver available to meet all that paper demand is shockingly small. Now that the spot market has overtaken the futures market, that imbalance is being exposed. In simple terms, investors are calling in their chips and demanding physical silver, not promises. This surge represents more than price movement. It's a shift in belief. People are waking up to the difference between money you can hold and numbers on a screen. North Star's projection, the road to $100? Then there's North Star, who added an intriguing observation. Euphoria above $50 has the capacity to take us close to $100 as long as stock markets continue to hold up. He's talking about something that traders call a psychological breakout zone. $50 has always been silver's glass ceiling, the level it hit and failed to hold in both 1980 and 2011. Now that we're above it, the market has entered price discovery mode, where no one knows the next ceiling. If history repeats and momentum traders, hedge funds, and retail investors pile in, the next natural price magnet could easily be around $75 to $100. That doesn't mean it will happen overnight, but the psychological barrier has been broken. And once that happens, markets rarely go back to the old normal.
Peter Schiff's confirmation, record broken. Peter Schiff came back with another post saying, silver just blew past $50. It's now trading above $50.40, higher than both the 2011 and 1980 intraday records. That statement marks a historic moment. It's not just the number, it's the symbolism. For 44 years, $50 was the ultimate resistance. It represented both the Hunt brothers' 1980 squeeze and the 2011 inflation fear spike. To break that level, silver needed something bigger, and that something is here: global inflation, massive debt, and loss of confidence in fiat. Schiff's message to the shorts, enjoy the ride, might sound cheeky, but it highlights what's really happening. Short sellers are getting crushed as physical delivery pressure builds. That's how short squeezes begin. Quietly, then all at once. Mike Maloney's perspective, inflation-adjusted reality. Now, Mike Maloney brings in the crucial context. $50 silver, inflation-adjusted, this is nothing. He's absolutely right. If you adjust silver's 1980 peak for inflation, that $50 level would be worth around $180 to $200 today. So in real terms, silver is still undervalued despite this massive rally. This is what makes this rally so unique. We're seeing record nominal prices, but inflation-adjusted prices are still far below their historical highs. That means silver still has room to grow, especially if inflation persists and the dollar weakens further. Wall Street Gold. Price discovery begins. Another major voice, Wall Street Gold, posted $50.58 silver, new all-time high. The metal just entered price discovery. Decades of pressure, gone in an instant. That phrase, decades of pressure, is key. For years, the silver market has been under scrutiny, from alleged paper manipulation to suppressed price action through derivatives. But when the spot market breaks free like this, it's like a pressure cooker releasing steam. We are now in price discovery mode, meaning the market, not the institutions, decides what silver is truly worth. And when price discovery begins in a market with limited supply and exploding demand, things can move fast. The bigger picture, what does this mean for the world? So what does all this mean in real-world terms? Confidence in fiat money is weakening. As governments continue to print, people are seeking real stores of value. The industrial demand for silver is exploding. Silver isn't just money, it's used in solar panels, electronics, batteries, and medical equipment. With the green energy transition, physical demand has never been higher. Physical shortages are becoming real. Dealers are reporting delays and premiums over spot are widening fast. That means what you see on the charts might not reflect what you pay in the real world. Silver is becoming both a hedge and a necessity. Investors are realizing that silver is the bridge between money and industry, both a financial asset and a functional metal. The road ahead, what comes next? Now, what happens next depends on several factors. If stock markets stay strong, speculative capital could continue flowing into commodities like silver. If central banks start easing again, the dollar could weaken further, which usually sends silver higher. But if markets panic or liquidity dries up, we could see short-term pullbacks before the next leg up. Still, the long-term trend is clear. The world is revaluing real assets. Final thoughts. History is being written. To quote Chris Marcus one last time, $51 spot, absolutely stunning. He's right, we're watching history unfold. For decades, silver has been the underdog, overshadowed by gold, forgotten by mainstream finance, and underestimated by Wall Street. But today, silver just reminded the world that real money never dies. It only waits for rediscovery. So yes, this is a financial milestone, but it's also a philosophical one. It's about trust, truth, and the return to tangible value. And as the world wakes up to this new $50 silver reality, one thing is clear. We've officially entered a new monetary era, and silver just lit the spark.
The information provided in this video is for educational and entertainment purposes only. It does not constitute financial, investment, or trading advice. Always conduct your own research and consult with a licensed financial advisor before making any investment decisions. The creator of this video is not responsible for any financial losses or gains that may occur as a result of the information presented. Investing involves risks, including the possible loss of principal.